How do you get high limit business credit even with bad personal credit? So here I'm going to share with you the top 7 tried and tested methods. Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome 30 Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you had to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about how to get high-limit business credit even with bad personal credit. So I'm going to share with you the top 7 proven methods you can try today to actually get the business credit that you need. This is important. The first thing is you need to understand business credit. I know you might be thinking, well, I understand the business credit, but you don't. I can tell you right now, you do not understand business credit. And it's important to really understand what we mean by business credit. So business credit is a company's ability to buy something now and pay for it later. It's all about timing. It can be 30 days, it can be 45 days, it can be 60 days. Big decision time, big decision time. Is your business right now a new business? In other words, a startup, an established business? How long have you been in business? Because it's important to understand, based on the operational history of your business, the types of business credit you can qualify for. Let's just get into it. What are the types of business credit? First, you have installment accounts. So installment accounts are business loans where you borrow a fixed amount of money. So you repay the lender a fixed payment amount over a fixed period of time. Everybody understands that, right? The interest rate is also fixed and doesn't change from month to month. Very easy. Then you have the revolving accounts. So the 2 main types of revolving credit you can open for your business are lines of credit and small business credit cards. Everybody understands the credit cards part of things. The lines of credit also you can understand. With revolving credit, you can borrow money up to a preset credit limit. So once you pay down your balance, you are free to charge up to your credit limit again as long as the account remains in good standing. The third category of business credit, you have vendor accounts. So vendor accounts, sometimes called net 30 accounts, let your company pay for products and services after you have purchased them, right? You can buy now and pay later, typically within 30 days, sometimes 60 days, 45 days, or even net 15 days, okay? So you have those terms too. You might have to have some personal guarantee. Sometimes you might have to pledge a personal guarantee for a business credit. And you need to know also the business credit reporting agencies. So we're talking about Experian Business, Equifax Business, Dun & Bradstreet, Credit Safe. You also have, in some cases, you have LexisNexis and SBFE, Small Business Financial Exchange. And remember that when we talk about those credit reporting agencies, you have some credit scores also that are important. So you have FICO score, the business FICO score, the FICO SPSS score. You have the Dun & Bradstreet Paydex, okay? And there are a lot of benefits of business credits. You can qualify for financing, you can save money, you can keep your personal finances and business finances separate. You can shop for better business credit card and loan options, and you can increase the value of your business. So those are really important. So after familiarizing yourself with business credit, now you need to check out asset-based lending, also called asset-backed lending. This is important. So this is actually a form of a financing in which lenders primarily evaluate a business's cash flow and they see whether or not the business is actually eligible for the kind of loan or line of credit that they are looking for. So when we talk about asset-based lending, we are speaking about the kind of lending that is based on the asset, but also on the cash flows. Very important. Money, money, money. So you need to pay attention to the kind of loan you want to get. If your job or your goal is to get business credit, even with bad personal credit, you want to think about asset-based lending. Okay, this is important because you're basically telling the lender, hey, listen, I want to buy something. I need money to buy some kind of assets, but I don't have stellar personal credit, and I'm willing to collateralize the loan because that's what an asset-based or asset-backed loan is. Okay, basically, what's going to happen here is that the lender will actually be more willing to give you the money because they know that they do have the title of the loan. If you don't, the title to the asset rather. So if you don't repay the loan, they can come and repo the machinery, the car, or whatever it is. Okay. So one thing I need to see here is that companies that can benefit from ABL, asset-backed lending, you have companies that have an asset-rich balance sheet. In other words, if you look at the PPE side of your balance sheet, the property, plant, and equipment, you do have stuff there. You have good assets there. If you have varying cash flows, you might be a good candidate for an asset-based loan, or if you're seeking capital. Let me give you an example. Are you in the manufacturing sector? Are you a distributor? Are you a wholesaler? Are you a retailer? Okay, those industries could be good candidates for asset-based lending. And so when we talk about asset-based lending, some examples include equipment financing, car lending, inventory financing, and real estate financing, right? Real estate financing is the traditional form of asset-based lending that everybody understands, but you do have others. You have machinery, you have equipment, you have car, you have inventory. If your goal is to get business credit, even with bad personal credit, you want to try accounts receivable funding, accounts receivable related funding. So what is that? What is accounts receivable financing? Accounts receivable financing is basically a means of short-term funding that your business can draw on using the company's receivables. And this is very useful if a timing mismatch exists between the cash inflows and outflows of your business. Okay, let's say the business is doing great, but your clients are just very late in paying. So like they wait for 30 days or they wait 60 days while your suppliers are asking for cash on delivery. So there you have a mismatch of cash, right? So this is where you might want to reach out to an accounts receivable financing partner for that. And AR financing can take various forms, but the three major types are: you have accounts receivable loans, okay? You have factoring, okay? And in some cases, you have accounts receivable financing arrangements. So the accounts receivable loans are very easy. Those are a source of short-term funding where the borrower can use their accounts receivables as collateral to raise funds from a bank. And the bank will typically lend a fraction that is 80% of the face value of the receivables. And the fraction varies depending on the quality of receivables, okay? The better the quality, the higher the fraction. What I'm trying to say is that if Amazon is your customer, the quality of Amazon receivables will not be the same as local ABC company. All right, so you got to pay attention to that. And now let's talk about factoring. So factoring is the most common form of accounts receivable financing for smaller businesses. So under the factoring approach, the borrower sells its receivable to a factoring institution, and the receivables are sold at a discount, where the discount depends on the quality again of the receivables. Okay, so since this is an outright sale of receivables, the borrower is no longer responsible for the collection process, and the amounts are collected by the factoring organization. So factoring can be expensive because it typically involves several fees alongside interest expense. And so you need to pay attention to that. It's a big decision time here. You need to know that there are some factors that affect the quality of receivables. So you have the creditworthiness of the debtor, the duration of receivables, the industry of the original account, the quality of documentation. This is very important. Okay. And also another form of accounts receivable financing, you have merchant cash advance. So those provide small businesses with an alternative from traditional bank loans. So business owners receive funds as a lump sum upfront from an MCA provider and repay the advance with a percentage of the business's sales. So those are the three categories I want you to be aware of. Step number 4, if you're looking to get business credit, even with bad personal credit, you might want to try secured lending. So when we talk about secure lending, we are speaking about two things: secured business loans and secured business lines of credit. Remember that a secure business loan is not the same thing as an asset-backed loan. No. In a secure business loan, you already have the asset. This could be a CD, a certificate of deposit. It could be a checking account. So it could be something else. But so this is not, if you have an asset-backed loan, the asset that you're buying is basically the collateral. But in this case, you need to have the cash first. Okay. So a secure business loan, sometimes called, sometimes they call it collateralized loan. But the thing is that it is a kind of business financing that is secured by some type of personal guarantee. Okay, personal guarantee. So if you're not able to repay your business loan, the lender can actually go after your personal guarantee to legally recoup his or her losses. This is important. So money. You need to understand, when we talk about secure business loan, you can secure the loan through property, savings. Okay, savings are important. You have the blanket liens also. In some cases, you have a personal guarantee. This could be one thing I need to say is that, similar to a blanket lien, a personal guarantee is a different type of security measure used to back a loan. In short, a personal guarantee is an agreement with your lender that puts your personal assets on the line, making you, as an individual, the loan's co-signer. So therefore, in the case that your business defaults on the loan and cannot repay, you are personally responsible for repaying the loan. So those are important to pay attention to. So there are several types of secured business loans and lines of credit. You have the regular secure business loan. You have a secure business line of credit, and in some cases, you might think about an SBA loan as being a part of a partially secure business loan, because the SBA wants you to put down maybe 20% of the loan or 15%. They want you to have a skin in the game. Okay, that's what it is, and you have to be very careful here. But this is what it is, because they are actually backing up. They are backing you up in the loan. They're probably backing you up to 80%, and they want you to have 20% in the game. So if your job is to get business credit, even with bad personal credit, think about a secure business loan or line of credit, or even a secured business credit card. Those are easier to get. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation here about how to get business credit even with bad personal credit. One thing I want you to pay attention to in step number 5, you need to plan. You need to plan, because if you're trying to get business credit even with bad personal credit, a little bit of planning goes a long way. What is that? It means that you need to think about your business as a business. The business must be set up in a legit way. It must be legit. This cannot be something that you have been doing on the side and that you basically refer to it from time to time. No. You want to segregate your personal assets from your business's assets, and it must be done legally. You can't just say, well, I think I have everything in my spreadsheet. I have an Excel spreadsheet, all colorful, whatever. No. It must be real. Big decision time. Do you currently have a business that is legally divorced from yourself as a person? If not, you want to start doing it now. You need to establish your business as a separate legal entity. Okay, you need to have an LLC, an S Corp, a C Corp. You can have a LP. The thing here is that if you remain a sole proprietorship, you might have a business, but you don't have an entity that is legally separated from your person, from your personal assets. And this is not the right way of doing things. If your goal is to actually cover your ass in case of a lawsuit, you definitely need to have an entity. Very important. You need to register your business. This is important. Depending on where your business is located, you'll likely have to register with your Secretary of State. So this is important. You need to request an EIN from the IRS. It takes about 5 to 10 minutes. This is not complicated. You want to open a business bank account. Those are important also. You want to get a dedicated business phone number. So basically, you want to have everything. You want to do everything in a legit way so that when somebody looks at your business, they know this is a real business. And don't get me wrong, I'm not asking you to go and get office space. You can still remain in your house or in your basement or whatever. You can work from home, but have a legit business. Okay, so those are important. You want to set up accounting. You want to set up accounting. You want to hire someone to do your accounting in-house, or you want to outsource the whole accounting operation. You can also get software to do it yourself if you have some notions in accounting 101 or you will need more than 101 to run your business. So bottom line is, if you have software like Expensify or Xero or Wave or QuickBooks, you can set up your own accounting. You also want to pay attention to your personal credit. This is important. Even if you are trying to get business credit with bad personal credit, you got to pay attention to personal credit. I know that the focus here is on business credit. However, depending on how your business is set up, or depending on how old your business is, lenders would want to see, they would be seeing a correlation, if you will. They will be seeing some kind of symbiosis between your personal credit and the business credit. So one thing you need to do is, your personal credit is already bad. So what are you doing to fix that? Talk to me about that. If your goal is to be unstoppable in getting the business credit you need for your company, then you need to work hard on your personal credit. You want to go right now, if you haven't already done so, you want to go right now to a website called annualcreditreport.com. You want to sign up, and you have a free credit report once a year. You have a free credit report from all three reporting agencies. You definitely want to know where you are at. You want to know your score. You want to see your credit report to see if there are any hard inquiries that are unauthorized, any derogatory items, any collections, any charges. If you have been a victim of identity theft, you got to have all those things, okay? Because your credit report, your credit score will affect credit cards. Credit card, right? They will affect loans. They will affect your ability to get credit cards, your ability to get loans at favorable rates. So this is important. And I'm not just talking about personal loans or personal credit cards. I'm talking about business loans and business credit cards. So those are important. And one thing you also need to be very careful about is to make sure that while you are checking your personal credit, you need to build also your business credit. Those two things must go hand in hand. They must go in tandem. It's important. And I was just telling you about things you can do to build business credit, trying to get an asset-backed loan, trying to get a secure loan or a secure credit card, trying to get a net 30 account by first paying. We have covered this on many shows where you are able to get a net 30 accounts or net 45 accounts, but you first need to pay for 30 days, and then you have to contact a salesperson. And with your business plan and financial statements, you can explain to them that you need to have business credit. This is very easy, but you need to watch those videos if you are interested in the topics, or just leave us a comment and we'll further explain things to you. If your job is to get business credit, even with bad personal credit, you need to establish a relationship with your bank or credit union. And I don't care, you don't need to have a relationship with a big national bank if you don't want to. But whether you have a community bank, a regional bank, or a credit union, you need to establish a relationship with them. And we call that here on this show a bank MPR, a multi-product relationship. In other words, you're not opening just a business checking account. No, you want to open a business checking account, a business savings account. If the bank or credit union offers other services that your business needs, for example, payment services, for example, merchant services, for example, payroll services, your job is to direct enough business the banks or credit unions way so that in return, they can actually take care of you also. Okay. You are in a position of weakness here. You have bad personal credit and you need to get business credit. This is a duality that doesn't work in your favor. So you need to really be very careful. You need to create you need to have a relationship with the bank. And big decision time. Do you currently have a good relationship with your bank? Do you have a multi-product relationship with your bank? Talk to me about that. So when we talk about MPR, not only we talk about business checking, savings, CDs, we talk about money market accounts. We talk about merchant services. Some credit unions do offer insurance products. For example, Navy Fed, I believe, offers some insurance products. So you want to get as much business from your bank or credit union so that they can actually lend to you also. Another thing you need to be very careful about when we talk about MPR, we are talking about deposit accounts. We are speaking about accounts in which the money is yours. We're not talking about liability accounts. We're not talking about debt accounts. I'm not talking about having a multi liability product relationship, like have multiple loans, have multiple credit cards, have multiple mortgages. No, the bank is going to look at you as a high risk. They're going to look at you. They're going to look at your exposure as a person. They're going to look at their exposure vis-a-vis you, and they will now want to lend further to you. Okay, so you need to have asset accounts. Very important. All right, folks. This is it for today's conversation. I was talking to you today about how to get business credit even with bad personal credit. Step number one, you need to understand what business credit is. Very important. Number two, you need to understand asset-backed loans. Number three, you need to understand accounts receivable funding. Number four, you want to try secure lending. It could be secure business loans, secure business credit cards. Number five, you definitely need to plan. You need to set things, you need to do things the right way. Number six, you want to fix your personal credit score if there's anything that needs to be fixed. And number seven, you need to establish a solid relationship with your bank. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.